Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me remotely is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are modeling out the impact of the coronavirus. And Phil, data seems to show we are past the worst in Europe and the U.S. ahead of the broader reopening of the economy. And we're kind of seeing that in our first chart today as well, with the S&P 500 range bound. And it seems as if investors are trying to figure out what this will look like with reopening the economy.
Yeah, I mean, in reality, the S&P's been kind of range bound for a while now. Obviously, on Monday, we got the good news on the Moderna virus vaccine testing, which wasn't quite as good as we thought. So on Tuesday, we had a little bit of a retracement, but basically the week since then has sort of bounced around sideways. So there's a lot of potential news coming, but it's coming a little bit slowly, isn't it? We don't know that much about vaccines yet. We don't know that much about the reopenings yet. Even looking at the data that we've been looking at out of Europe for their reopenings, which is a couple of weeks ahead of us, we're not seeing anything good or bad. So we're not really sure what the next sort of 3 months is going to bring. But it's just something we've got to keep our eye on the news cycle. If we get a vaccine or good news on the vaccine, that's going to be positive for markets. If we get a couple of countries that see a spike in cases, that's going to be bad for the markets.
You also point out, too, that consensus is starting to move away from a V-shaped recovery.
Yeah, I think that's something that I've been hearing, just lots and lots of economic discussions. Initially, we're thinking we shut the economy down really quickly, we'll be able to restart it really quickly. And as we see data from other countries, as we see even the problems that China has had, trying to get everybody back to work, trying to get the supply chain back in order, just the fact that the demand side of their exports is missing now. It's been much harder to get back to full capacity and back to full revenue. The Chinese government gave up on their GDP target this week for the year. So there's definitely more problems in China getting it restarted. And in Europe, we're seeing phased implementations of restarts, which makes total sense because we don't exactly know how contagious this is still. And we don't want to put everybody back to work like we had 3 months ago, only to have to stop and shut down the economy completely again. It'd be really nice to get the economy 50% running safely, then 75% running safely, and then back to full speed, rather than have a stop and a start and a stop and a start. So what's happening when you look at the surveys is, rather than lots of people thinking it could be a V-shaped recovery, that option is probably the least interesting and least popular. A lot of people now looking at a U-shape. We had a swoosh a couple of weeks ago, or a W-shaped recovery. The W is obviously if we have a second wave of cases and have to reshut the economy. A U-shape or an L-shape or a swoosh is just because it's going to take a lot longer to get everything back to normal. It's going to take longer for the GDP to recover.
My concern is, though, and we see this on the next chart, daily global cases are rising. That's not the trend we want to see.
Yeah, it's geographic at the moment. So if you actually look at the data, Europe has crushed the curve. A lot of Asia is getting pretty close to zero new cases. So a lot of the developed markets have got COVID under control. There's the clear outliers where they've stopped the rises but haven't really crushed the curve, being the US, the UK, and Sweden. But for the most part, the developed markets are well past the problem. What's happening now is you're seeing the emerging markets are starting to see COVID cases spike. And you look at Russia, it seems to be past its peak, so it seems to have gotten it under control, but it's become a top 2 or 3 country in terms of total cases. But then you look at Brazil, you look at India, Peru, Saudi Arabia, Mexico, South Africa, all still on the upswing in terms of the exponential growth of cases that we remember from a couple of months ago. So they're contributing more to these new case spikes than all the developed markets. But that's bad news for the global economy because a lot of these countries are part of the supply chain.
So let me ask you a question about Asia, because Hong Kong and what's happening with the Chinese government is really and some more uncertainty that's put back in the market. What do you think could potentially happen with Hong Kong, as it really is a financial hub in Asia?
Yeah, I mean, the English law helped it become a center of finance years ago. What the Chinese government has announced today is part of its plan, I guess, to merge it back into one China. And so I think from a business perspective, it'll be interesting to see if the laws change, whether it's mostly banks that are headquartered in Hong Kong, but Asia has got a lot of different cities which are headquarter size. Singapore and Japan has Tokyo as well, have a lot of different finance industries. So it's possible the finance industry starts to move away from Hong Kong if they think these new rules aren't really supportive of Western style financial markets.
Yeah, it will be interesting to see how that all plays out. And we have to end on a positive note going into a holiday weekend. And manufacturing data, it looks like that's also supporting the fact that we're past the worst in the Europe and US.
Yeah, I mean, there's actually quite a lot of data series that show the dramatic drop that we kind of expected, I guess, based on the number of businesses that were forced to close, has stopped falling. So we've got PMIs in the charts for Europe and for the US bouncing off lows. But you could look at hours worked. You could look at some of the employment number, not unemployment, obviously. You could look at small business confidence. Even restaurant bookings show that we are past the worst. We're not bouncing straight back, so that V shape that we talked about earlier does not seem to be happening, but at least it's not getting worse. And so that should be good for those that are getting back to work to try and realize that there is light at the end of the tunnel. And hopefully the tunnel is short and we will all be back to work and back to normal sooner rather than later.
Yeah, certainly hope so. Phil, thank you so much for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.